Hello, and welcome back to Sanjak Radio, where we bring you the hits of accounting. This time we're bringing you hits from Chapter 4 Homework. This is your host, Professor Naragon. Now, welcome to Chapter 4 Homework. Again, I'm working through our Connect webpage. Again, you can click the link that's in Blackboard to go to Chapter 4 or just go to Connect and access it that way. So we're going to start. And of course, the first few questions are always videos. So you can watch these or you can go ahead and go past them. I again strongly encourage you to always watch them. It just gives you a better understanding of what's going on. Little extra hints. So, skip. 5. And here we go. Problem number 6. So we're going to compute, while this thing's loading, compute the amount to be paid for each of the 4 separate invoices, assuming that all invoices are paid within the discount period. Alright, so we got A, 6,400 with terms 2 of 10, and of course, since it's all been paid within the discount period, we're not even worried about these. So we're just looking at here. Some have 1% discount, one has 3, this one has 2. So again, you can have your fancy hint if you want to look at your hint button. So of course you can always click and it'll pop up the hint video. Or we can actually do this again. Since this is 2%, we want to take out our calculator. Make sure everything's clear. 6,400. So 6,400. Again, since this is 2%, I'm going to do it that second method I showed you in the notes by just times it by 0.98. Again, 100% minus 2% of a discount leaves only 98%. And we're always going to do it in decimal form. So that actually means we're going to pay 6,272. So 6,272. And again, if you want to do this method, as soon as you put it in, hit check my work. And boom, always correct. Make sure you fill out all 3 blanks. So let's go ahead and keep going. Just as an example, 22,100. We have 1 over 15. So 22,100 on our calculator. 22,100. This is going to be times by now 0.99. Because again, it's 100 minus 1%. So means we have 21,879. Sweet, 21,879. And then the same thing we go on for the next ones. 77, what is it? 800? Yeah, 77,800. Again, times by 0.99. 77,022. 77,022. And then the last one, this one's 3%. So of course, 100% minus 3% means there's a 97% that we'll times it by. So 13,500 times by 0.97. Again, this is the best and easiest way to actually do a discount or calculate discount. Notice mostly discounts are going to range from 1% to 5%, usually not higher than that. So best thing, again, if it's 3%, times it by 0.97, gives you the amount just like that. Don't have to do extra stuff. Simple goes. 13,095. 13,095. And again, once you go through each one, you can either go each time, just hit check my work, or you can just basically do it once you're done, see if there's anything wrong. So calculation for discount, very easy. So let's see what's going on with the next ones. So of course, we always start easy, get harder and harder and harder as we go. So question 7. We're going to record purchases, returns, and discounts taken on whatever item we got. So most likely we're going to have all 3. So since this is purchases, we are looking at the buyer. So again, take out your notes, look at the chapter 4 video that was done to help you with the buyer, or even check out the hints. There's multiple ways, or just keep following along with this video. Everything works, but I would always strongly suggest trying to do the problem first, look at the video, and like this video is for hints and how to work it through as we go. So make sure you do that. Of course, it helps out along the way. So first off, we have a purchase of 1,350 units of a product, and it costs us $20 per unit. Alright, so this doesn't give us the actual cost. So let's figure that out real quick. So take our calculator. We purchase 1,350. We purchase it for 20 bucks. So just times it by 20. And this amount right here is the actual cost to merchandise inventory. We actually bought it for $27,000. Okay. Some of these problems you have to do that. It's just getting the actual cost. Now notice this. Our terms for sale is 4/10. So we have 10 days. If we want to go ahead and check early, we know we paid here on the 15th. Again, we got a discount. We have a 4% discount. So we want to see what we have at the end, and 4% times it by 0.96. But we're getting ahead of ourselves. Let's just do one journal entry as we go. So again, this one tells us the actual transaction before we go. So on November 5th, we're purchasing. So again, we're going to look at what increased to us. Was it some kind of ownership? Of course, we now own beautiful 1,350 of somewhat the units of some kind of product. Let's hopefully these are cars, because I just want to drive around in a car. Yay. $20 per unit, so most likely it's not cars. Unless we can actually get a car for 20 bucks. They're probably Hot Wheels. Probably the big old fancy Hot Wheels, the big ones. Remote control cars, so let's go with that. Alright, so again, first account, since we received merchandise because we purchased it, we're going to find merchandise inventory. And then, how did we basically purchase the inventory? Well, we purchased it on a contract or on credit. So my other account, of course, is going to be accounts payable, because we owe the other company that amount that we got for. So 1350, boom. Again, if you hit check my work, it should be correct. But something's up here. What did we not do? Okay, turn to question. Oh, I did the common mistake. I just told you how much cost is, and look what I did. I put in the units. So common mistake right here. Apologize for that. Again, it's 27,000. So it's always good to actually show the common mistakes. Oh. 1, 2, 3. So again, Connect is going to warn you, and it's always good to see. I just made a slight error, and that happens. No questions asked. It's just an error. So again, take the 1350 that we have, times it by 20, and that will get you the right amount. So again, after you hit check my work, you want to hit the X when you go back, and that will get you right back to here. Again, connect likes debits before credits. So exactly like the journal entry in the notes. Next one. So let's go to. We return 50 of those defective units. So we return 50 of those. And again, our journal entry is basically going to be the flip. Since we return, we no longer owe however amount that 50 is. And we no longer have the ownership of those 50 units. So let's go look. Again, it was 20 bucks per unit. So on our calculator, we take 50 times 50 times our 20 means it's $1,000. So 1,000 debit because accounts payable is going down. We no longer owe. Merchandise inventory is also going down because we no longer own that inventory of $1,000. Again, check my work. Make sure you did all the math. Everything still looks good. We can move on. So next one is going to be the discount itself. Well, first off, we're going to have to figure out how much of accounts payable we still have. For my problem, it's going to be easy. We have 27,000 minus the 1,000. Now, you didn't need the calculator for that, but again, just to show you what's going on, there we go. This is the amount that's in accounts payable. This is the cash that we are supposedly owed. Okay? So since we already know with accounts payable, to make that go down, our decreased accounts payable, that's going to be our debit. So our debit's going to be the 2,600. Well, again, every time we have a discount, we're going to have 3 accounts. So let's do both the ones we actually know. One is accounts payable. In order to pay for accounts payable, we pay out our cash, but we don't know this amount yet. So our discount was 4 for 10, so 4%. Since we only had 2,600 left, we got a discount off of this amount. So since it was 4% and we're using our little method, 100% minus 4% leaves us with 96%, or 0.96. So the actual cash we paid was 24,960, which isn't too bad. 24,960. Alright. Now, we're the buyer. So with this, our merchandise inventory has to match how much cash we have. So since that's the case, this difference, because as you can see, it's not in balance, they don't equal. And of course, if you just thought it was those two accounts, it connected is going to show you answer is not complete, but notice it's not going to tell you what's missing. But since we know that those two aren't in balance, we have to finish it up. So going back to 3. So the only account that's going to happen is merchandise inventory. Again, merchandise inventory is the cost of how much that inventory was actually bought. So merchandise inventory, it's going to be a credit. How much? We just take the difference. So if you got a calculator that easily can show you this, like mine, that's online, that's good. If you just need to look at here and punch it into the calculator, make sure you always subtract your debits and credits. So subtract accounts payable amount from the cash amount. So 26,100 minus 24,960 shows me I have an actual merchandise inventory has to go down to balance to 1040. So and actually the amount of the tax return number. So, but there's our journal entry. Again, merchandise inventory has to match, its ending balance has to match how much cash we actually bought it for, because that's our cost to actually have the merchandise inventory. So it's going to be the difference right there. Again, if we have shipping involved, shipping, again, if we paid cash for it, you notice that merchandise inventory basically goes up because of that. That's again because we're dealing with the costs for that merchandise inventory. But that's going to be our journal entries. Again, check my work. It says answer is complete and correct. We're good. We can move on. So of course, we're going to see if it's going to deal with anything selling. Probably not. And of course it doesn't. Question 8 is again doing recording purchases and discounts taken. So we look at question 8. August 1st, we purchased merchandise with an invoice price of $69,000 and credit terms of 2 for 10. Alright. So again, shows us right here. Good stuff. So again, make sure your dates, yeah, they're within 10 days. So we're okay with that. We'll get discount. So again, we're going to show our thing. We're the purchaser. So we receive merchandise inventory. We have it on credit. So that's going to be my payable because I'm going to owe someone. Again, we don't have to do the calculations like before, so no mistakes right here. It's just going to be $69,000. Alright. So with that, 69,000, everything's good to go. We can move on to the next part. Again, you can always check my work, which I always strongly encourage. With these, you can check my work. Since on the quizzes, you cannot. So make sure you understand the stuff. As as by this time, you probably have a quiz or so under your belt. So, with that, let's move on to part 2. Part 2, now we pay the amount. Again, we have 3 journal entries. We always start with accounts payable when we're the buyer. We're going to deal with our cash. And deal with merchandise inventory. So, I would say always know your 3 accounts. Put your 3 accounts in for whichever scenario we're dealing with, the buyer or the seller. Since again, this is the buyer, life is good. So first part, we put in our accounts payable. We need to look back. Accounts payable, we do not have any returns. So it's going to be the actual 69,000. So 69, 1, 2, 3. So 69,000 right there. Again, we are paying within the discount period. So our discount was 2%. So again, take 100% minus 2%, or 100 minus 2. We know we have 98 left, or 98%. So we're going to take our cash. It's going to equal to 69,000, or whatever amount accounts payable is, times it by our discount rate, 0.98. Says we actually paid 67,620. So credit, because we paid this, 67620, 67620. And there we go. There's most of our journal entry. Now we just gotta find the difference. And that's our merchandise inventory. Again, merchandise inventory has to balance out to what we paid for it. So 69,000 minus that 67,620. Grand old total of 1380. Woo! 1380. And check my work. Everything's good. We're good to go. Let's move to question 9. Now we're recording sales. Hey, we finally flipped to the other side. So, remember this again. Most likely we're going to have 2 journal entries when we're dealing with sales and returns. Connect is going to probably have you split these out. Why? Because Connect's odd. Just the way it is. So, with that being said, we're going to look at each one. Notice that there's 7 journal entries that we're going to do. There's only 4 accounts. So, of course, we got 3 accounts that we're going to look at. That 3 extra journal entries. So, let's start off first on April 1st. So, April Fool's Day, we decided to sell merchandise for $5,600. That's all we're focusing on this journal entry. So with that being said, anytime we sell anything on credit, we know we have to debit accounts receivable, because this is saying that we provided a bill to our client. They just have to pay it to us, and we record the sale. So easy enough. 5,600, 5,600. Okay. So that's one. But again, there's 2 journal entries that happen on April 1st. This one is actually recording the cost. Okay? So, cost of merchandise or cost of goods sold, they are always going to be expense. They're always going to be our debit when we sell something. So, they have cost of goods sold. They don't have cost of merchandise sold. Works either way. We're good and fine. Again, the best way to always do is type in it, and it searches very quickly. You don't have to scroll down the huge menu of chart of accounts. So with this, our expense is increasing, but our credit will be merchandise inventory. Again, we lost ownership of that inventory. We sold our rights to it. And it's just going to be how much the cost was. $3,060. So again, this was, if you look at the buyer side, this is how much it cost us to buy the inventory or the merchandise. So again, we always want to do it as a profit. So there's our second journal entry. Both going on 1. So again, you can hit check my work. Again, we do 2 journal entries whenever we sell something. We do 2 journal entries when we return something. So we have to keep an eye out on those types of questions. And close that out. So, question 3. The customer in the April 1st sale returned $640 of merchandise for full credit. In this example, we're always going to give you full credit. In the real world, you may have that 10% stocking fee, stuff like that. That stuff we're not going to get into. But we're always going to be full credit. So for this, it's not going to be just like how the buyer is. With this, we don't just reverse accounts receivable and sales. No, you do not change sales. Sales is what it is. But the account that you use instead, since this is a return, this return deals with sales returns and allowance. Since we cannot affect the actual sales account itself, one, that's basically going to throw red flags for any audit that you have if you do change that revenue account. This is why we have returns, allowance, and discount. So that's going to be there. Since they returned $640, they no longer owe us that money for $640. So we're going to have accounts receivable. So it is technically a reverse, just like when the buyer returns stuff, except that it's going to be sales returns. Okay? And of course, we put in our debits and credits. 640, 640. Now I told you usually these dates they tend to have a second account, especially if they actually state that there is a cost associated, which most likely there is. So part 4 is going to deal with the cost. Alright, so we return the merchandise. This one's a little bit easier because it is a flip. So it's going to look like this journal entry of when we sold it, except these two accounts actually do flip. So we're gaining our merchandise inventory back, and later we'll probably end up putting writing it off for something else, which again we're not getting into right now, but that's really what business will go into. If it's bad products, we're going to write it off later on. So merchandise inventory, since we now received it back, we can no longer put a claim to our cost of goods sold for that amount. So just 384 for the amount that was returned. That's cost related to it. Okay. Alright, so question 5. Again, we sold merchandise. This time we sold it for $2,300. Repeating the same steps. So since we sold, on credit, we're going to have the accounts receivable. We're going to have our sales for our, however much the contract is. And that's how it goes. Alright, so nothing special there. Of course, we're probably, whoop, I hit next by accident. Always watch out what you do with Connect. Alright, going question 6. Now we record the cost of merchandise. Same thing as number 2 in this problem. So cost of goods sold, merchandise inventory for the same amount. So 1610 for the cost that's actually associated. Alright. Now, question 7. So we received the payment for the amount due from the April 1st sales less than return on April 4th. Alright. So the first job here, this is our April 1st one. So we know we sold it for $5,600. Let's put that in our calculator. $5,600. We know we had a return associated with this. So here we had $640. Okay. Watch out, do not click on 4 that had the cost associated. We're only dealing with the sale, because that's the one that has accounts receivable. Accounts receivable is the key one. That's the one that we're using. So minus 640. That says accounts receivable. Right now, all we have left is $4,960. That's how much the customer owed us. So again, you can do a T-chart with that. If I did a T-chart, same thing. So write my little T-chart. This is my AR, and this is basically what's going on. So AR account. It starts off with 5,600. Of course, that's our debit. So 5,600. Then we have 640 being returned, or they no longer owe us. 640. Now this is going to be to whatever customer. So whatever customer we have, we like to keep them separate. But you take your basically difference, and that equals out to the 4,960. So again, notice if we do our T-charts, 4,960. And I know this ain't the greatest, but 4,960 goes again on the debit side. That's how much they owe. And then when they basically pay it off, they're going to pay off their full amount, 4,960, in accordance to AR. Now the cash received could be completely different because we got discounts involved. But basically, when they finally pay off their item, or we buy it, pay off ours with AP, basically this account goes down to 0. Okay, they no longer owe us money. So here, we know that we received the payment. AR is going down. Well, the only way AR goes down is through credit. Okay, alright, it goes down by credit, goes up by debit. Opposite for accounts payable. So, and we already know that it has 3 accounts. So, with that, we know accounts receivable is going to be our credit. And that's going to be the 4960. There we have. So you notice I left 2 blanks again because we have 3 accounts. One, obviously, is going to be cash. So cash. And of course, to figure out cash, we have to know how much of a discount we gave them. Since we're the seller this time, we gave them a discount. So looking at our contract, let's see, with credit terms in 30. Okay, it's not showing there. Let's see here. So it didn't actually give any kind of discount. Oh wow. Usually Connect makes us do discounts like they right here. But there's no discount to be shown. So with that being said, basically you notice that it killed off the blank because I switched through. That's basically it. There's no discount. So we didn't offer them a discount. Oh, that helps us out. Yay. So it's simply just cash in accounts receivable. Sometimes that works. Most likely it's not going to happen too often. But, that's good. Let's double check. Make sure our work is correct. Answer is complete. We didn't have a discount. Yay. So that means probably question 10 may have a discount. So let's look at question 10. Again, we have sales, purchases. This time we have shipping. Looks like maybe involved. Remember, I'm just reading what's up here. And we have return buyer and seller. So, we're going to look at each one. Notice right here in the instructions before I get into the journal entries. We have prepared the journal entries for Sydney, and we have prepared the journal entries for Troy. It even tells you which one's the buyer, which one's the seller. And these 3 transactions. So we're going to look at both sides. Cool. Let's see what we got. We just have the journal entries. Nice. So what we're going to do is we're just going to go right through each one. And then we're going to basically be done with it. I would most likely like it to where it actually does a side-by-side view. Side-by-side view actually helps you out to see how much it changes or how much it actually stays the same. It's just the accounts are different. So we're going to see that a little bit. Still the same counts. First off, we have we're going to do Sydney. So Sydney again is the buyer. So we have to look at all this purchases. So here Sydney accepts delivery of $38,500 of merchandise it purchased for resale from Troy. Invoice dated May 11th. Terms 3 for 10. So we had 3% discount if we pay them off in that point. FOB shipping point is, again, shipping point. It's dealing with merchandise inventory, so if there's any shipping in, Sydney has to actually pay for it. And shipping inventory point, it's dealing with merchandise inventory. And merchandise inventory is only with the buyer when it has to be with shipping. Remember, seller gets destination. They get the delivery expense. Not shipping expense, but delivery expense. 2 different expense accounts right there. Be careful of that. Okay? And then the cost of goods sold cost Troy $25,795. So when we're looking at the buyer, first off, I don't care about the sentence. Doesn't affect the buyer. Doesn't affect Sydney. Okay. So with this, we do our simple buying it. So first off, we receive ownership of some merchandise. We owe Troy. So accounts payable. And it's going to be the 38,500. 38,500. Okay. Nothing big deal right there. We're good to go. Let's look at question 2. So Sydney pays $440 cash to Express Shipping for delivery charges on the merchandise. Remember, this was shipping point, so buyer does have to pay for shipping. So since we're paying for shipping, this is considered, again, part of the inventory. This is all cost to that inventory to get it in our hands. And since we have to actually pay for it, we don't expense this. This is capitalized. So this is going to only deal with merchandise inventory. Since we paid cash, we already do our cash, and we'll just do it for the amount of shipping. And boom, there we go. So groovy right there. Again, if you ever have questions, there's the hint button on some of these questions. There's check my work. And you always see everything's still running good. It's always good to know this because that helps you out later on with these books, especially with quizzes or exams. Okay, exit out. Alright, so question 3, or transaction 3, we're going to look at this. Sydney decides to return 1,500 of the 38,500 of goods to Troy, who receives them the same day and restores them to its inventory. The returned goods had cost Troy of 1,005. Now again, since we're only focused on the buyer, I do not care right now for the return good cost because that's not towards Sydney. So Sydney returns. So with this is the simple flip of the cells. So we no longer owe Troy that amount. So our accounts payable is going down. It's going to go down by 1,500. And that means basically our merchandise inventory has to go down too. We don't own that inventory anymore. So again, that's going to be a credit because it's an asset. Assets are going down. The only way to go down is by a credit. So again, that's how we return on the buyer side. Once we go to Troy's side, you're going to see a whole different aspect going on. In fact, he's probably going to have more numbers than the buyer. Alright, so last one, question 4. Sydney pays the Troy that amounts. Troy receives the cash immediately. Okay, so is it within the discount period? Do we have a discount? Well, first off, we do have 3 for 10. So if we pay within 10 days, so we had May 11th. We paid it on May 20th. With that being said, that's 9 days. We did good. We have 3%. So again, 100 minus 3%. We're going to times it by 0.97 or 97%. But first, we had return, and so our balance is actually down. So how much does Sydney owe? We're going to take the 38,500. This was immediately what was in the account. And we're going to subtract by the amount that we returned. So right here, again, if you had a look at the cell right there, return, we returned 1,500, so 1,500, and we owe them 37,000. That's what our accounts payable shows. Again, our accounts payable is going down for the full amount. So since it's going down, that's a debit of $3,700. Okay, 37,000. Sorry. We know we have cash. And you're going to notice this is the easy way to actually go through. If you flip cash and merchandise inventory, that's fine. Connect still reads it. I do it this way because it's the step-by-step process. So cash, let's figure out cash. We take our current balance in AP to this contract, and of course times it by basically 97. Again, to get the 97.97, just take basically 1 minus 0.03, or 100% minus 3% will equal 97%. So our cash, or the amount that we actually paid, was $35,890. So $35,890. Alright. Again, notice these won't be in balance, and the difference is going to be the merchandise. Again, we have to put down to the cost that we actually bought the inventory for. So basically paid our cash. So the difference between those, 3,700. I can't type all of a sudden. 37,000 minus 35,890. 1,110. Not bad. So 111. So that's going to be your journal entry for the buyer. Again, we can check my work, and everything's correct. Notice again, answer is not complete because we haven't done the seller side. But that's everything so far, so good. Now we're going to look at required 2. We're going to do the opposite. So required 2, record the merchandise sold on account. So again, this one doesn't give us all the accounts, the numbers and stuff like this one did. So we can always go back and look at what happened, or you can scroll up. Okay. So record the merchandise sold. So first off, they have 5 accounts. This one says record the cost of goods sold, record the sales return, cost of sales return. So Connect likes to split it up of the journal entries because there is 2 journal entries involved with each one. So starting off, we're recording the sale. So again, we're going to expect to receive cash. We gave them a little option. That was 38,500 again. So 38,500. We made our revenue. So this time it still sells. 38,500. And that's it to record the sale. Same thing that we've been doing. Nothing different. It's always a sell on account. Number 2, record the cost of goods sold. Again, this is basically recording the expenses. So we're going to look at cost of goods. Our other account, we lost inventory. Basically, again, we don't own the inventory. We look at how much it was right here. It says $25,795. So 25,795. Okay. And looks like everything's good. Everything's going on. Okay. Move to question 3. Now we record the sales return. Now remember, we again do not affect sales. Sales is done. We have 2 other accounts that deal with sales. Since this is a return, it is sales returns and allowance. for the amount of cash. So again, Sydney returned $1,500. So $1,500. Again, now they don't owe us that amount, so that's going to reduce the accounts receivable. Of the same amount. But of course, we have costs associated with that. We can't take those expenses now because now we own the inventory. So since our inventory is back, we have to record the inventory being back. So for us, it cost us $1,005. So that's now back. That's in our possession. And we can't record the expense. Up. Now. So again, this is what is known as reverse entry when we actually flip the two accounts. Alright. So there's our return. Nothing different going on here. Again, it looks similar to what we just did in problem 9. Just a little bit spread out so I can see both sides. Now we return the cash collected. Here, we already did all the math. We don't have to deal with any more math. We just have to record a journal entry because it's going to be the same numbers as our buyer. So I can flip back and forth. That's what I'm going to do because that's just easier to show you. So first off, let's get the accounts in. We know that the cash, that we're going to receive cash. So cash is going to be a debit because they paid us. We know that they made it within the discount period. So there's only one account that deals with discounts when we're the seller. And that sells discount. And then of course they paid off what they had left in accounts receivable. So there's my accounts. So since they paid off what's left in accounts receivable, we know that's going down. So that's going to be my credit. We received cash, that's going up. And we just have discounts, which is also going up and is a debit. So basically the same journal entry we did before in prior chapters, just we're now adding sales discounts. So let's go back to required 1. And this is going to tell you to save it. So you can always just pull the numbers if you need to. But here we go. So our accounts receivable should be the same. And it will be the same. So it's $37,000. Our cash is also going to reflectively be the same. And our discount is going to be what the merchandise inventory was for the buyer. This is always cool when we have the two. Again, if you did the math and actually did them all, it's going to end up being the same thing. So let's go required 2. And you go to the last. Again, 3,700. Discount was the 110. And of course, cash was the other one. I'm going to flip to the calculator real quick. 35,890. 35,890. Alright. Again, double check. You can add these up. Make sure they're balanced. Just in case you accidentally switched a number. And then just hit check my work. Boom. Answer is complete and correct. There's all of our journal entries. Okay. Again, this chapter is basically just getting you used to the journal entries and who does what. Again, the seller is the only one that has sales. They have sales returns and sales discount. They're also the one that has their accounts receivable. Buyer has accounts payable. Okay. Alright, let's go look at the big bad boy. So, question 11. If you're going to notice something about question 11, it looks oddly similar to what's in your notes. So, with that being the case, I could tell you go look at the prior video on the notes and save you time watching it again, because it's basically the same steps. Which basically I can tell you to do that, but most likely you're not. So I'm going to be simple here. I'm just going to go right back through it real quick. Okay? So all these have actually been done already in the prior questions. All this is seeing where Cabela is the buyer or the seller. Notice again, it tells you hint on identifying each receivable and payable. Again, since we're dealing with multiple accounts, we want to actually look and make sure we get the right receivable and right payable. So, July 1st, repurchase merchandise from Bowden Company for $6,000 under the credit terms of 2 for 15. Again, watch out for all this. It's actually going to appear a little bit more often. With the discount periods, again, always check to make sure when we sell this, if we do basically pay them off, that we're in the discount period. Most likely we're going to be. So, or it's going to say within the discount period, net of discount, all that just to help you out. So, now we purchase merchandise from Bowden Company for $6,000. Again, since we're the buyer, our stuff is a little bit easier. First thing, take the ownership of the merchandise of $6,000. And of course, we're going to have accounts payable. We owe Bowden Company. Notice that it has a bunch of accounts payable and accounts receivable for each person. Again, just check off whichever company, which organization we have. And there we go. And put 6,000. Now notice it does say FOB shipping point. So if there's any shipping, we have to make sure, is it us that owes that shipping, or is it going to be the other person? For this time, since it's shipping point, that is to the buyer. Again, shipping point is for buyer, destination is for seller. Alright, so nothing new there. Everything's still good. Question 2, or transaction number 2 on July 2nd. On July 2nd, we sold merchandise to Creco for $900 under credit terms again. Remember, again, when we sell something, we're probably going to have 2 journal entries. Connect likes to piece them all out. That's why you see there's 17 transactions or 17 journal entries. Just take that and remember that there's 2 journal entries involved. One for sell, one for cost of goods sold. So again, this is our sell. So Creco is going to owe us. And so we're going to find accounts receivable, Creek. We're going to debit for the amount of the contract. And we're basically going, again, credit our sales, our revenue of the same amount. Alright. So those first 2 transactions, nothing new, still same. Now we have to record our cost. So again, cost is first we record our expense account, cost of goods sold, 500. And then our second account, of course, is losing the inventory. So merchandise inventory, 500. Okay. Again, I'm going to go a little quick because if you want to check out the last video, you can actually see this problem in action again. Nothing different here. This is the few times that we actually pulled it from the actual homework. So we paid for freight charges since it was shipping point. This is the buyer. Buyer has merchandise inventory. Okay. Seller has delivery expense. Notice None of these questions had delivery expense, so watch out for that later on. So always check out on that. So, of course, we paid cash. Okay. So, again, if this was the seller, if they were actually selling and buying it, they don't even have it, so you don't even have to worry about it. But if they had it, be careful of delivery expense. Again, that only happens with the seller. With the buyer, it's merchandise inventory. Alright, moving on to 5. We record the sale of merchandise for $1,700 in cash. Again, we don't have really a client here because they bought it for cash. No contract, no nothing. So, of course, the sale right here, we actually sold merchandise for $1,700. So we received cash, and we sell of $1,700. Okay. So basically, we received cash. Why receive cash? We sold merchandise. Did we have anything related to the cost of goods sold? Yep. So we still record the cost of goods sold. Again, inventory, our expense goes up, our inventory goes down, just to show the exchange of the inventory. Now the cost goes to whoever. It is okay for us. Alright, so nothing too bad. Still the same basic journal entries we've had. And we're already to question 7. And here's a new contract. Remember, I believe there was like almost 3 or 4 contracts going on. Right now we had 2. We had purchase, sell. Now we're doing another purchase. This time we purchased from Light. So with that being said, since we purchased from Light, we know we're receiving inventory. And this is going to say we're going to owe Light. So since we owe, that's accounts payable of the contract amount. Alright. And then watch out, 2 for 15. And this is FOB destination. So that means Light Co. is responsible for shipping. We're not going to pay anything, which is great. We love that. Okay. And again, in physical terms, we would put in the dates. Connect's already done that for us, so we don't have to worry. And the dates would be July 9th, July 11th, 8th, whatever day they are done. Alright, go on to 8. Alright, so now we received the $700 credit memo from Light Co. for the return of part of the merchandise purchased. So let's go back at the contract, which is easier to just go up here. We did the purchase right here. So we were the buyer. So we have to do the return as the buyer. And since we returned it as the buyer, we only affect merchandise inventory. So we basically reduce our payable. We no longer owe Light that amount. And since payable is only reduced by debit, it's kind of like we paid them off a little bit of $700 by just giving back them their own merchandise. We have to debit accounts payable, reduce that, and then we have to credit merchandise inventory for the inventory we no longer have. Alright? Ooh, just chugging along. Alright, number 9. We have received the balance due from Creekco for the invoice dated July 2nd, net of discount. So they automatically tell us there's a discount. Of course, if we check the dates, most likely they are underpaid. So again, 2 for 10. Went from the 2nd. They paid on the 12th. Exactly 10 days. They're good to go. So again, this was only 900 bucks. So we're going to take the 900. In fact, let me clear out all of that and just work on this major problem. So 900, it was for 2%. So 100% minus 2%, that's 98%. Again, we only deal with decimals, so that's 0.98. So they actually paid us 882 bucks. Again, they didn't have any returns, so that's pretty much good. So with this, we know we received cash of $882. They no longer owe us, so their accounts receivable has to go down. They paid off their bill to us. But is it going to be for 882? That can't work. Can't be for 882. And it's going to yell at us, Connect's going to yell at us for putting a credit first before another debit. So let's move this down here. So again, the process is we do know that this transaction happened, that we have a cash. Our accounts receivable right now, again, has the full amount of the contract of 900. So, with that being said, again, we have the blank account. Well, since we sold this one and we received, we have the discount. So, sales discount. Okay, and again, it's going to be the difference between the two. If we want to do it real quick, I bet it's just 18 bucks. Boom. And there we go. Again, you can do your calculator. Just take 900 minus the 882. And again, $18. Nothing too bad. Alright. Move on to the next. We now pay the balance due to Bowden Company within the discount period. Again, no returns whatsoever. So we are going to have discount, but first we paid our balance. So we know it's accounts payable because that's going down. It's all only debit. Since there is no returns, we just put it for the full amount of the contract. For us in this one, it's $6,000. Now, with this one, we definitely know we can put cash first. So let's figure out the cash. Since this was in the discount period, again, it's only 2%. So we can take the 6,000 and times it by 0.98. Equals out to cash being paid of $5,880. With that being said, notice again, these do not balance. It's going to have a third account. And since we are actually paying this time around, our merchandise inventory should balance for this contract, or these products, $5,880. Of course, we'll have shipping involved, but for this transaction, $5,880. So again, all we're going to do is take the difference of the two to balance everything out. So 6,000 minus 5,880 equals 120. Okay, so 120. Boom, everything's balanced. Alright, next one. Now we've sold merchandise to Artco. So again, we sold. So we like that. We have accounts receivable from Art. Again, they owe us money. We sold it. And of course, we record the sales. And it's just 1,200 and 1,200. Alright, so now it's sold. Okay, let's see what the next one goes. record our cost of merchandise. So again, cost of goods sold of 800. Merchandise inventory goes down by 800. Easy peasy, lemon squeezy. Okay. Question 13, or transaction 13, journal entry 13. We've issued 200 credit memo to ARTCO for allowance of goods sold on July 19th. So this is a return. Again, this contract, if we look at it, we sold, so we're in the seller's position. So this means we have sales returns. So sales returns and allowances. Again, we do not affect the revenue account, only returns and discounts from here on. And of course, we received our merchandise back. So, but that's dealing with cost of goods sold. I'm getting ahead of myself. This one we actually deal with the accounts payable. Or receivable. It's receivable. Boy. So 200. Boom. And there we go. There's our return. So accounts receivable goes down because they no longer owe us that 200 bucks. We have to record the return because basically this is going to affect our revenue. So of $200. Alright. Now we have paid Lightco the balance due, net of discount. Now be careful. Lightco, we actually had a return with that. And of course, we purchased merchandise, so we're the buyer. So we're going to have to deal with that actual difference. So let's find out what we have on difference. First off, it started at $2,700 for the contract, and we have 700. Again, with the return of 700, if you want to do the real easy stuff, that's 2,000. But of course, showing on the calculator. So their account started with 2,700 minus the 700 equals out to $2,000. Okay. So that's all we owed Light. So we're going to pay them off. So first off, accounts payable is always going to get debited because it's going down. We don't owe them that amount anymore. This is only $2,000. Next part is our cash. And remember, our cash is only affected by what's currently in accounts payable for that person. So we're going to take the 2,000 and times it by whatever discount there is. So we look at their contract. Again, we had terms 2/15. So again, that 98.98. So 2,000 times 0.98 equals out to 1960. So right here, credit 1960. That's how much we paid in cash. And of course, you find the difference between the two and put it with merchandise inventory. And that's a little bit easy. We can do mental math right there. It's going to be $40. If you need to use the calculator, again, just subtract the 2. So 2,000 minus 1960. Alright. 15. We received the balance due from ARTCO for the invoice dated July 19th. Alright. So we sold that. Let's go ahead and knock that out. So again, we're going to have a return. So we sold at 800. The return was 200. Again, we're going to do mental math. It says that amount of ARTCO actually owes us is 600 bucks. So that means it's a credit. Again, this is net of discount. So since it's net of discount, they paid within the discount period. which is a little bit easy to see since it was on the 19th. They had 15 days. They paid way early. The account receivable is my credit. We're going to have two accounts related. First off is the classic one, cash, since we received cash. And of course, since we know it's in discount period, and since we were the seller, we have sales discount. Again, this is the tough part to remember if you're the buyer or the seller. Here on this one, we were the seller. Anytime it says we received cash, most likely we're the seller. Okay. So we already pointed that the receivable was $600. Again, 800 minus 200, 600. Cash received. Let's calculate this. Again, contract is only for 2% discount. They made it real easy. So 600 times 0.98 says 588 cash was actually received. So 588. Discount is the difference between the two. Again, if you use mental math, it's only $12. So, and if you want to, you can subtract the two. Again, 588. Oh, 600 minus 588 will get you $12. And of course, you can always add them up to make sure it balances out to 600. Again, always make sure your debits equal your credits. Has to work, no matter what. Okay, so that's it right there. So what else can they throw at us? Well, they throw in another selling. So we sold again. I don't know why another contract for selling, but they did. So we sold merchandise to Creekco. Again, they owe us. So we're going to deal with their accounts receivable. Again, to Creek for an amount of $7,500. Again, we got our sales of $7,500. And then look at 17, which 17 is going to be our cost of goods sold. So one last time, cost of goods sold, merchandise inventory of 4,800. So again, if you're looking at this video and you're like going, my numbers don't match this, the thing is, your homework is going to be different on the numbers, but the principle is still the same. So that's the key. If you can understand the principle, you're going to be fine and dandy. Okay? And again, at the end, check my work. Okay, they're popping me up with an error. Sometimes you just have to hit OK and it still goes. Alright, so we have an issue here. We have answers complete but not entirely correct. So that means I either put the answers in wrong or I did something up. Alright, so it looks like my mental math was a little off. So let's go check what's happened. Alright, so again, that's a good thing. See, check my work. Showed me that one question was off. And y'all probably already yelled, oh no, that wasn't the right math. Alright, so let's go look back at this. Oh, okay. So notice the mistake I did. If y'all didn't, then y'all saw I took the wrong number. I took the 800 minus the 12. And somehow they lost my connection. Alright, so this happens a little bit. So let's see if they can give me back my connection. Here comes connect. So I can at least show you what I did wrong. Hopefully, if not, then basically what I did wrong is I took the wrong number. Should have been 1200. So it should have actually been 1200 minus 200. which equals to 1,000. We should have taken that 1,000 times by 0.98. So cash would have been 980. And of course, take the difference of the two. Equals to 20. That would have been my basically discount. My sales discount was 20 bucks. So let's see. Nope, they completely logged me out. So unfortunately, I can't show you the actual ways because again, I doubt it's going to actually give me the problem. It's going to make me go right through everything. So unfortunately, I can't show you what happened, but basically that was my mistake right there. I didn't take the actual contract. I went and did one of the common mistakes. I just took the first cash number, which I didn't read. So always read. Like we said, I mean, if we don't show you the mistakes that happen, well, I mean, it's just getting caught. So anyway, that's it for, yep, they put me right back, so it's not going to give me the same problem. But again, that's going to be it for this chapter on the homework. I mean, just follow along and you're going to be good to go. I'll catch you back in the next video, and hopefully this was a little bit helpful. If anything, if you have any questions, you can put it in the comments below of this video, or you can just send me an email. Okay? Y'all have a good one.